You're supposed to have portfolio diversification and all of that stuff. But sometimes when a macro bet is so clear, so big, so obvious, you just got to do it. So I feel guilty because people say, well, can't you write about currencies? I'm like, nothing's really going on. It goes up a few percent, down a few percent. Bitcoin, meanwhile, is up 100%. So that's the reality. And I've talked about this it's like a supermassive black hole that just sucks in everybody because the performance is so dramatic. We realized that coming out of 2008 and 2012 in Europe, everyone lost faith in the banks, everyone lost faith in financial media. And so it used to be a centralized world where the power to run your money was concentrated in the hands of a few. And we thought about this and thought this has to change. How can you trust somebody you barely know with your life savings? You have to play a part in it. And that's the democratization of financial intelligence. We thought we need to give the same information, level the playing field for everybody. And Bitcoin is that in a whole asset class. Now we've got a structural roadmap. We kind of realize the world's moved forward and we've got price action that confirms it. And then out of the blue, we started hearing about institutions in the space. And for me, same thing, is because I had a ton of conversations. It started with hedge fund managers in their personal accounts saying, I got to get some Bitcoin. And then I'm like, if it goes in their personal accounts, I'll end up in their funds. They just can't do it yet. And then you start seeing what Fidelity are doing and BlockFi are doing and a bunch of other people are doing in the space, and you realize they're making institutional access easier. Okay, that gives me more conviction. Then you start seeing the announcements come, and then offline, I'm getting ridiculous phone calls from ridiculous people telling me ridiculous stuff about what's going on. I'm like, wow, I knew about the New York Dig guys for a while because, I knew a bunch of people involved with them. So that gives me the confidence that it's not just, let's say, like Wall Street Bets, where it was basically a bunch of retail investors trying to maintain price action. Here we've actually got a broadening, diversifying, deepening market, which looks perfect technically, has a good roadmap, has good seasonality. It's like, if you can't find conviction here, you're never going to find it. Because like you, this is like the perfect storm, positive storm for Bitcoin. For institutions, it is, what is the adoption? What is the regulation? What is the market cap? So the more it goes up, the more the market cap makes it available for them to purchase. Corporate treasurers don't think of it in price terms. They think of it, what does it do to the balance sheet of my corporation to offset other issues that I have with currency balances and treasury ownings and bond ownings and stuff like that. And so that's not a price conversation as such. Obviously, price is important, but it's more overall. If you think about it, right, you're in charge of your mum's pension plan and everybody like her. What you then have to do is justify that it's safe and it's secured properly and you've done all your due diligence. And that's a lot of work because it can't be, look, trust me. It's not Michael Saylor. You don't own the company, basically, or have all the voting rights. You have to appease millions of policyholders. So you've got a massive legal liability. So you have to do all the work. All of the things that they need just for their risk models aren't normal. So all of this needs to be built out. And you need to get approval from trustees. So it can take 2 months to get to buying futures. It can take 9 months to get to actually buying Bitcoin and custodying it with somebody. The other thing for people to bear in mind is there's a couple of price hurdles that are coming up that people haven't thought through. The first one is Coinbase's IPO. So if you are an institution who wants to buy Bitcoin and you've got to go through all this rigmarole to try and get it signed off, and Coinbase IPO comes out and it's a $60 billion company and you can stick a few billion in, it's a good enough proxy for a while. The next big thing after that is, I think 100,000 is going to be an issue because a lot of people got in around 10. A lot of people will have made 10 times their money, and 100,000 is a round number, and people think, let me take half my chips off the table. So I think we might see a longer correction. the potential returns each cycle go down as the market cap gets bigger and bigger, because retail cannot drive. If I sell it to you and there's only one in existence, you can drive up the price. If there's two of you bidding for it, you can drive up the price. But a lot of retail investors are in, the institutions coming in, and then it becomes really hard to go from a $5 trillion asset to $10 trillion to $20 trillion. So I think the returns go down over time anyway. And I think we've seen that in the cycles. But what is the return from the next cycle peak to the next cycle peak? I don't know, call it 200 to 2 million, who knows? Another 10x. Not many things give you 10x.